What's up, future financial rock stars? Welcome back to the channel. If you're watching this, you're probably grinding from home, stacking sats, and dreaming bigger than your current Wi-Fi signal. We're talking about generational wealth here. And today, we're peeling back the curtain on one of the most explosive catalysts in crypto right now, XRP Exchange Traded Funds, or XRP ETFs. Forget the noise, forget the FUD. We have serious data-backed analysis that shows if XRP ETFs captured just half of the inflows that Bitcoin ETFs saw in 2025, the XRP price could skyrocket to $22.48. That's an 844% increase from its current trading value of 2.38. Think about that for a second. An 844% gain. That is the kind of leap that changes the whole WFH dynamic. It's the kind of move that makes assets like XRP a golden goose. You need to know how this calculation works, why it's realistic, and what this means for your portfolio. Stick around, because we're diving into the three major reasons this price target is achievable. Let's go. First, let's set the stage. The buzz around XRP ETFs is huge, and the prospects are still seen as bullish by market watchers. We know that the US government shutdown has slowed things down, pushing back deadlines for major filings like those from Grayscale, 21 Shares, and Bitwise. But industry experts like Michel, CEO of Tokentis, believe the SEC will grant approval once that shutdown wraps up. It's a matter of when, not if, according to the general consensus. When that widespread approval actually materializes, industry leaders expect massive capital inflows. Stephen McClurg, CEO of Canary Capital, has predicted that XRP ETFs could see initial inflows ranging from $5 billion to $10 billion in just the first month of trading. And here's the key parallel. We saw how Ethereum ETFs underperformed early on, but eventually picked up serious momentum. They've now secured a total net flow of $14.57 billion in about a year and 3 months. That history proves that these institutional products are built for the long haul, showing that it could be up only for XRP spot ETFs, which would positively impact the XRP price. Now let's talk about the hard numbers. Our core analysis asks a simple question. What happens if XRP ETFs capture only 50% of the Bitcoin ETF inflows recorded this year? This leads us to our three massive benefit points for potential XRP holders. Benefit point 1, the realistic inflow benchmark, the 13.3 billion catalyst. To put this into context, Bitcoin ETFs have seen cumulative net inflows of over $65 billion since launch. Specifically, in the 2025 calendar year alone, Bitcoin ETFs attracted $26.6 billion in inflows. If XRP ETFs capture just 50% of that $26.6 billion figure over the span of 2 years, that would mean a net inflow of $13.3 billion. This is an incredibly reasonable expectation, especially when we remember that Ethereum ETFs have already secured $14.57 billion worth of inflows in a slightly shorter time frame. So, hitting $13.3 billion is absolutely within reach. Benefit point 2, the power of the multiplier, 90x leverage. Here is where the math gets exciting and often overlooked by casual investors. Capital inflows don't just equal a one-to-one increase in asset valuation. They lead to higher spikes in market capitalization due to the inflow to valuation multiplier. We've seen examples where even modest inflows like $61 million led to a massive $16.6 billion rise in XRP's market cap, translating to a 272x multiplier. For the sake of being conservative, or as the source puts it, wust for the sake of modesty, we are only considering 1/3 of that multiplier, landing us at a conservative 90x ratio. This means for every dollar that flows into the ETF, the XRP market cap increases by about $90. Benefit point 3, the 844% price target, your freedom number. Let's tie it all together. If we take that $13.3 billion in net flows over 2 years and multiply it by our modest 90x ratio, the calculation suggests a staggering $1,205 trillion increase in XRP's market cap. Currently, XRP has a market cap of $143 billion. Adding that $1,205 trillion increase would result in a new market cap of $1.348 trillion. based on the circulating supply of around 60 billion. This new valuation translates directly into an XRP price of $22.48. That is the 844% increase we talked about. This isn't just theory, it's a calculated outcome based on capturing half of Bitcoin's institutional interest. For those of you working from home, maybe grinding a side hustle or juggling multiple contracts, this isn't just about market dynamics, it's about opportunity. The potential for an 844% gain is the kind of movement that can accelerate your timeline for financial independence. This forecast shows the massive impact that institutional capital, the kind locked up in ETFs, can have on an asset's valuation. This is why smart crypto earners are staying informed and watching key developments like the XRP ETF timeline. Whether you see XRP as a crucial part of the decentralized future or as a golden goose that can feed your family forever, this analysis provides a clear, actionable target derived from institutional adoption metrics. It's an exciting time to be in this market, especially for those of us who believe in the power of digital assets to reshape our financial future. Keep doing your research, stay focused, and recognize that opportunities like this often reward the informed and the patient. However, I must stress this. This content is purely informational and should not be considered financial advice. The views expressed might include the author's personal opinions and do not reflect the general opinion of the source. You are strongly encouraged to do thorough research before making any investment decisions. We are not responsible for any financial losses. Always, always, be your own bank and your own financial analyst. All right, team, you've got the roadmap. The potential for XRP to hit $22.48 based on institutional interest is real, and the mechanisms driving it are clear. 90x multiplier, $13.3 billion inflow target. If you want to stay ahead of these monumental market shifts and get more analysis that unlocks potential 800% gains, you have to hit that button. 1. First, smash that like button if this analysis gave you some clarity on your WFH investment strategy. 2. Second, hit subscribe and turn on notifications. We are dropping crucial insights like this weekly, and you don't want to miss the next big catalyst. 3. Finally, I've linked a related product down in the description. It's a powerful tool to help you track these exact institutional inflows in real time. Go check that link out immediately, because speed is everything in this market. Thanks for tuning in. Keep hustling, keep learning, and I'll catch you in the next one. Peace.